It is Friday, September 7th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was an interesting get your ass kicked at Jiu-Jitsu Friday. We did some stuff. It always bugs me when I can't remember what we did. You know, it usually means that the guy that I was working with on the open mat choked me out too hard and killed a brain cell or two. No, my partner was actually very, very good. As a matter of fact, he tapped me out well enough that I couldn't actually finish the 5 minutes. I was done ski at about 1 minute 30 till the end, and I couldn't keep going. Guy's very, very fast, very, very skilled, very, very technical. As a matter of fact, it's funny. I knew he had done some training before. He reminds me so much of Jean-Claude Van Damme. I've been working out for pretty much my entire life, since about 14, 15 years old. And during that time, I've ran into people that to some extent have stylized their movements after Jean-Claude Van Damme. And it's cool, you know, it's kind of a flattery thing. But this guy, he captured that and then has taken it a step further. Like he's legitimately that good. I don't know if he can do the full splits like Jean-Claude could, or if he had done any ballet or anything like that. But I do know that the man can do some fucking impressive kicks and has a pretty together striking game. I think he needs to put a little more thought into what he's doing as far as jiu-jitsu is concerned, his ground game, because he was overly excited about this potential on a choke that he had, and in the process of him being terribly excited about that and not concerned really as much with what I was doing, I'd managed to get a hold of one of his collars, and if it had gone a few more seconds, I would have gotten him in a really nasty loop choke. Because I was just putting my arm to the back of his neck, and you know, I would have sealed that, and it would have been Dunsky. But anyway, point being that the guy's really, really good, and so he tired me out really quick. But that's more because this last week I've probably put more into jiu-jitsu than I have in a little bit. I've been first I missed Monday's class 1 week because what's his face, Hicks and Gracie did this video thing, and it happened to coincide time wise with my class, so it's just like, okay, well, I'm not. I guess I'm at jiu-jitsu, but I'm not going to be at jiu-jitsu. I'm in class with Hicks and Gracie, so you know, I'm going to take that opportunity. Anyway, so you know, like I said, I have been missing more jiu-jitsu than I would like. You know, and then of course there was also Labor Day, and that kind of fucked with everything too. But I did get in on Tuesday. I got in on Wednesday, and then I got in on today. I would have gone yesterday, but I was finishing up some work that really needed to be handled. And it's funny, I was finishing up some stuff today that I had started last week, and you know, it wasn't until today that I'd done some of the finishing touches on them. And when I did the finishing touches, it came out like perfect. Like before I had done the finishing touches, there was still a little bit of a ripple here and a ripple there. But when I did the finishing touches, it's like this wood trim. And when I put the wood trim in, it stretched the plastic just enough and uniformly enough that it makes the plastic look like glass. It's fucking perfect. And I was really kind of worried about that because last year I used 6 mil plastic on this particular application, and this year I used 4 mil. And that has some advantages and some disadvantages. It stretches a little more, the 4 mil stretches a little more, and that's good, but it will stretch until it rips, which is bad. And it's just keeping aware of what that tolerance actually is and how much strain you can put on it. And the more the better. My hope is that I've got it stressed in such a way that it will last through this year and through next year, or at least onto the other side of next year. And I found out really quick that it's not about the thickness of the plastic. It's about how tight and how firm you get it. If it's too loose, what'll happen is it'll flex. And if it flexes too much, then it'll get brittle in the sun and then it'll break. You don't want that. Anywho, back on over to jiu-jitsu. It was an interesting day. We were working on arm bars, and the particular arm bar that we were doing, I really liked, but I kept fucking up the order on my legs. I'm supposed to get the leg up over the head first, then I can lean over and get the leg up near the armpit. And I kept trying to do the armpit one first, and I was killing my fucking partner because I'm like 200 pounds. So, he's got all that weight coming right down on his rib cage. And so yeah, it was difficult. I often have coordination issues. But what's funny about that is that I worked out with my first active roles today were with a gentleman that was much larger than me. And I know he was kind of taking it easy, because I've seen him perform very, very well before. And so, half the time, again, I don't know if I'm just that good at neutralizing attacks or what, but it seemed like I kept him pretty well contained today, although I don't know that it was funny, I was operating at about 30% as far as like how much resistance I was giving him, but even at 30% I was keeping him from doing any submissions on me. And it's funny because the exercise was that he was supposed to be from half guard on top, or not half guard, side control on top side control, and trying to get into submission. So Kimuras, Americanas, those kind of things, and also of course collar chokes. And that seemed to be the one for the du jour for me today was collar chokes. I kept trying to get collar chokes in, and one of these days I'm going to get one of those guys. It's because I think it's like they get so involved in their collar choke that they don't notice, oh hey, wait a minute, he's got his hand up on my throat here, this isn't good, he's pulling the kimono tighter here. It's I don't know, I have a style where I'm aggressive on multiple points, and it's like ultimately I want to isolate it down to one arm, one leg, one move. You're absolutely certain it's going to be one of maybe two, maybe three things, and there's nothing you can do about it. That's where I like to put people. Anyway, let's go ahead and throw down into our first dance. And as far as what to do, it's been a while since we've thrown down body count for our first dance, but I think I'm going to skip that urge just because I still got a little bit of jiu-jitsu in me, and I'm feeling that warrior mentality, man. So it's got to be A Shogun Named Marcus by Clutch here on Coin Metal. And that was Wisconsin Death Trip by Static X. Oi. My apologies. Ran a little bit long there on the smoke break, but we do what we gotta do, I do have plenty of tabs open, and I've got a couple ways we can go with this day. I don't know. I'm kind of interested in all of it, honestly. But this one thing that I found really interested me, and I want to do a quick verification here that there isn't anything that I want to like immediately cover, because this one is kind of long. It's 24 pages. Even though I will say this, there's a lot of double spacing and all that other bullshit on there, so it's probably not going to be a problem. And there goes a moron driving down a fucking logging road. It's okay, he'll encounter a big yellow gate in 3, 2, 1. Yeah. It's gonna have to turn around now. Poor guy. Such a bitch to do because it doesn't have any shoulders. It's a fucking logging road. Ooh. This one is pretty cool, even though it's not something that I was actually going to cover because it's not actually crypto related, but I think it's worth noting. This is on August 23rd of 2018, but this is pretty interesting. This is on the Inquisitor.com. FDA approves magic mushrooms for treating depression. Can you imagine what a big ass step that is? The FDA approving the FDA approving psilocybin for anything. I mean, there's plenty of anecdotal evidence that it does something to relieve a lot of mental pressure, and I think it's because it gives you a lot of metaphoric tools to try and negotiate the stimuli or stress that you've been avoiding otherwise. You know, it always catches up to you, you know. In when you're tripping on psilocybin, it tends to catch up to you a bit more readily. And I know from my last experience with psilocybin that it'll probably be a while before I do that again. I mean, it's one of those things that, you know, you don't need to do it all the time to understand the message you're getting, you know. You only really need to dabble once or twice and you kind of get it, you know. Although I see it as a continual teacher, meaning that you can get more than one lesson out of it. And sometimes if you're confused in other forms of counseling have not been effective for you, you may consider a guided session, and certainly do have a sitter, because when the moment of realization does come to you, it can result in panic. It doesn't always. As a matter of fact, it usually leads to significant breakthroughs, but you do have to confront it. You can't run away from it. You know, there's that fight or flight, you know, but the fact of the matter is that you are the scene, so there really is nowhere to run to. You know what I mean? Anywho, this one I've got, and I want to cover it because all of these events in U.S. courts and elsewhere in courts set legal precedent for a great many things with regard to how the state regards something, you know, whether it be alcohol prohibition or regulation of cannabis when they finally get smart and legalize it. The lawsuits that come out afterward, or, you know, concerning any industry, as a matter of fact, they set the tenor for how the state will go about doing things like regulating it, you know, and seeking licensure and insurance and all that other bullshit. Anyway, so this is on chicagobooth.edu, United States District Court, Southern District of New York, Federal Reserve, TNB USA Inc., plaintiff versus Federal Reserve Bank of New York, defendant. And so yeah, this thing is 24 pages, but like I said, it's all double spaced. And I mean, I'm looking at this first page, and there's like maybe 25 lines on it. So and they're pretty well spaced. So like I said, I think we can get through this pretty quick. Plaintiff TNB USA, TNB, in support of its complaint against the defendant, Federal Reserve Bank of New York, FRB-NY, alleges the state and states the following. Nature of this action. Number 1, TNB brings this action for a declaratory judgment, injunctive relief, and a prompt hearing to compel FRB-NY to comply with its statutory obligations and open, quote, master account for TNB, a state-chartered bank based in Connecticut. Number 2, TNB was founded in 2016 by individuals with many decades of experience in financial services. Quote, TNB stands for the narrow bank, and its business model is indeed narrow. TNB's sole business will be to accept deposits only from the most financially secure institutions and to place those deposits in TNB's master account at the FRB-NY, thus permitting depositors to earn higher rates of interest than are currently available to non-financial companies and consumers for a safe liquid form of deposit. This isn't exactly what we were anticipating. 3. TNB's board of directors and management had devoted more than 2 years and substantial resources to preparing to open their business, including undergoing a rigorous review by the State of Connecticut Department of Banking, CTDOB. The CTDOB has now granted TNB a temporary certificate of authority, COA, and is fully prepared to permit TNB to operate on a permanent basis. However, to carry out its business, indeed, to function at all, TNB needs access to the Federal Reserve payment system. In August 2017, therefore, TNB began to route administrative process to open a master account with the FRB-NY. Typically, the application procedure involves completing a one-page form agreement followed by a brief wait of no more than 1 week. Indeed, the form agreement itself states processing may take 5 to 7 business days, and that the applicant should, quote, contact the Federal Reserve Bank to confirm the date that the master account will be established. Number 6. This treatment is consistent with the governing statutory framework. Concerned by preferential access to Federal Reserve services by large financial institutions, Congress passed the Depository Institutions Deregulation and Monetary Control Act of 1980. The Act. Under the applicable provision of the Act, 12 U.S.C. 248A C2, all FRB-NY services, quote, shall be available on an equal non-discriminatory basis to any qualified depository institution that, like TNB, is in the business of receiving deposits other than trust funds. 7. TNB did not receive the standard treatment mandated by the governing law, despite Connecticut's approval of TNB as TNB's lawful chartering authority. And the language of the governing statute, the FRB-NY undertook its own protracted internal review of TNB. TNB fully cooperated with that review, which ultimately concluded in TNB's favor. At the same time, the FRB-NY also apparently referred the matter to the Board of Governors of the Federal Reserve System, the board in Washington, D.C. 8. In December 2017, TNB was informed orally by an FRB-NY official that approval would be forthcoming, only to be called back later by the same official and told that the board had countermanded that direction and based on alleged, quote, policy concerns. 9. TNB's principals thereafter met with staff representatives of the board, as well as the president of the FRBNY, to explain that there was no lawful basis to reject TNB's application for a master account. On information and belief, the FRBNY and its leadership agreed with TNB and were prepared to open a master account. 10. Though TNB had satisfactorily completed the FRBNY's diligence review, the board continued to thwart any action by the FRBNY to open TNB's master account, reportedly at the specific direction of the board's chairman. 11. Having delayed the process for nearly 1 year, effectively preventing TNB from doing business, the FRBNY has repeatedly refused either to permit TNB to open a master account or to state that the FRBNY will ultimately do so. Number 12. The FRBNY's conduct is in open defiance of the statutory framework, its own prior positions, and judicial authority. See Fourth Corner Credit Union versus Federal Reserve Bank of Kansas City, 86 F 3D 1052-1071, 10th Circuit, 2017. The plain text of 248 AC 2 indicates that non-member depository institutions are entitled to purchase services from the Federal Reserve banks. To purchase these services, a master account is required. Thus, non-member depository institutions are entitled to master accounts. Bacharach J, emphasis added. Number 13. Further, the FRBNY's actions, especially in the context of other recent conduct by the board, have the effect of discriminating against small, innovative companies like TNB and privileging established, too-big-to-fail institutions, the very dynamic that led Congress to pass the act in the first place. Number 14. TNB therefore brings this action for a prompt declaratory judgment that it is entitled to a master account. Parties. Number 15. Plaintiff TNB is a bank authorized by the state of Connecticut that is prepared to engage in the business of receiving deposits other than trust funds, with its principal place of business at 25 Marshall Street, Suite 2D, Norwalk, Connecticut 06584. 16. Defendant, the FRBNY, is one of the 12 Federal Reserve banks of the United States, with its principal place of business at 33 Liberty Street, New York, New York 10045. It is a corporate instrumentality of the United States, created by Congress, with its own board of directors. Jurisdiction and venue. 17. This court has original subject matter jurisdiction under 12 U.S.C. 632, which provides that, quote, all suits of a civil nature and common law or inequity to which any Federal Reserve Bank shall be a party shall be deemed to arise under the laws of the United States, and the district courts of the United States shall have original jurisdiction of all such suits. 28 U.S.C. 1331, because this is a civil action, quote, arising under the Constitution, laws, or treaties of the United States, and 28 U.S.C. 2201A, because there is a, quote, actual controversy requiring the court to declare, quote, the rights and other legal relations of TNB an interested party. Under Rule 57 of the Federal Rules of Civil Procedure, FRCP, the court may order a speedy hearing of this action. 18. This court has personal jurisdiction over the FRBNY under NYCPIR 32 because The FRB NY1 transacts business within New York, where its principal place of business is located, and number 2, owns, uses, or possesses real property situated in New York. 19. Venue in this district is proper under 28 U.S.C. 1391b1 and 2 because the FRBNY has its principal place of business in this district, where a substantial part of the events or omissions giving rise to the claims at issue have occurred. Factual background. A. The FRBNY must provide a master account to any qualified depository institution. 20. Before 1980, the Federal Reserve payment system was an unequal regime. Large commercial banks that were members of the Federal Reserve's established automated clearinghouse, ACH networks, cartels essentially, through which they exercised effective monopoly control over access to the developing national electronic payment system. 21. These member banks paid nothing for Federal Reserve Bank services, but used the ACHs to charge non-members for access to the same services under opaque pricing regimes. 22. Smaller emergent financial institutions such as the thrift industry, potential agents of innovation, were at a substantial competitive disadvantage. 23. In 1977, the United States Department of Justice, DOJ, brought a pair of antitrust lawsuits against the California and Rocky Mountain ACHs. The DOJ alleged that the ACHs, by denying thrift institutions direct access to the Federal Reserve's payment system, had unlawfully restrained trade to economically benefit ACH members. 24. The DOJ won both antitrust lawsuits and established a right of access to the Federal Reserve payment system for thrift institutions. 25. Following those victories, Congress went further and enacted the Act, creating a right of access to the Federal Reserve's payment system for all depository institutions that meet certain basic qualifications. 26. The Act ensures that pricing for Federal Reserve services would be transparent. The board was required to, quote, publish a set of pricing principles and, quote, to put into effect a schedule of fees for such services which is based on those principles. 12 U.S.C. 248A. 27. The fee schedule explicitly covers numerous Federal Reserve Bank services essential to any depository institution and all of which require a master account, as well as, quote, any new services which the Federal Reserve Systems offers. ID 248A-B. 28. Critically, the Act commands, quote, that services covered by the fee schedule shall be available to non-member depository institutions. ID Section 248C2, emphasis added. 29. That language is plain and mandatory. The Federal Reserve Banks must, without exception, provide services to all, quote, depository institutions defined to include any state bank, quote, engaged in the business of receiving deposits other than trust funds. As TNB is prepared and authorized to do, see 12 U.S.C. 461B1AI, citing ID 1815. 30. And see, we're already on page 7 out of 24. Like I said, we'll blow right through this thing. 30. More than one federal circuit judge has interpreted the Act to mean just what it says: equal access to Federal Reserve Bank services for all qualified depository institutions. 31. The board and the FRBNY itself have long taken the same view. 32. Quote, a master account is, put simply, a bank account for banks. It gives depository institutions access to the Federal Reserve System's services, including its electronic payment system. Without such access, a depository institution is nothing more than a vault. Fourth corner, 861 F 3D at 1053, Moritz J, citation and internal formatting omitted. Oh, wow. We're already to references here. Let's see here. Damn, I forgot to make note of the annotations on it because it is annotated. And you can review this yourself. We're on page 8 so far. Number 33, master accounts, therefore, are undoubtedly a Federal Reserve Bank service subject to the Act's mandate of equal access. Quote, all services offered by the Federal Reserve System are conditioned on the issuance of master accounts. ID at 1068-69, Bacharach J, citing Fed Reserve Bank's Operating Circular Number 7, Book Entry Securities Account Maintenance and Transfer Services 3.19, 3.12, and 5.2, effective June 30th, 2016. 34. Without equal access to master accounts, there simply cannot be equal access to Federal Reserve Bank services. No shit. 35. Important policy concerns underlie the Act's mandate of equal access. Number 36. Equal access promotes competition by leveling the field for all depository institutions, small and large, new and established. 37. Equal access also promotes federalism by ensuring equality of opportunity among national and state-chartered banks, many of them small community banks that, quote, allow credit to flow to individuals and businesses even in remote areas of our country. B. Formation of the TNB. 38. TNB was founded in 2016 by its president, Eugene Park, a 30-year finance veteran whose foresight and efforts to forestall disaster at AIG Financial Products before the Great Recession of 2008 were described in Michael Lewis's bestseller, The Big Short. Number 39. TNB's chairman and chief executive officer is James McAndrews, a former 28-year employee of the Federal Reserve System, most recently as Executive Vice President and head of the Research and Statistics Group at the FRBNY from 2010 through early 2016. Hold on right there. See, I can see a potential conflict of interest right there. Because basically they were he was the head of research and head of the research and statistics group at the FRBNY from 2010 through early 2016. So that means that he probably had access to proposals for multitudes of financial products and strategies during that time. So yeah, I can see a potential conflict of interest there, and probably the only reason that this is being really held up at all. Anyway, continuing on. 40. TNB's Chief Technology Officer and Head of Operations is James Calcagno, a technologist and operations specialist trained at the Massachusetts Institute of Technology. 41. TNB's Chief Financial Officer is Dean Melchior, a 30-year finance veteran with a degree from Wharton School of Business who has worked at several prestigious financial services firms. 42. TNB's board of directors is required to be at least 50% independent and includes Daryl Duffy, the Dean Witter Distinguished Professor of Finance at the Stanford University Graduate School of Business, and Gary Gorton, the Frederick Frank Class of 1954 Professor of Management and Finance at the Yale School of Management. 43. Under its bylaws, TNB is restricted to a single business activity, providing ultra-safe depository services for institutional money market investors. 44. TNB's business plan is to hold 100% of its assets derived from customer deposits as Federal Reserve Bank balances, earning interest at, quote, the interest on excess reserves, IOER rate. God damn, my brain is falling apart. TNB will pay interest to its depositors at a slightly lower rate, thereby earning a modest profit. 45. TNB will make no other investments with depositors' money and will offer no other services. Its sole function is to pay interest on deposits in a simple, transparent, and virtually risk-free manner, and to safely return deposited funds on demand. So in other words, they intend to be retaining 100% reserve at all times of their customers' funds. I can tell you right now they'll probably get wrecked. Continuing on. 46. At a time when the Federal Reserve System has encouraged financial institutions to reduce the complexity of their operations and to ensure that their risk is well controlled, TNB will do precisely those things. 47. TNB does not need and has not sought insurance from the Federal Deposit Insurance Corporation because TNB's customer base will be limited to large institutional money market investors, from whom the $250,000 insurance limit would be immaterial. Foregoing FDIC insurance has the added benefit of further reducing TNB's costs, so it can pass along the savings to its customers. Yeah, also that gives them kind of a cloak of invisibility where everybody just kind of has to trust them because the Federal Deposit Insurance Corporation doesn't have to audit their books. Something to keep in mind. C. TNB applies for a state charter. 48. To operate legally as a bank and obtain a master account, TNB was required to obtain a state or federal charter. In July of 2016, TNB began discussions with the CTDOB concerning its application for a state charter. 49. Over the course of the next year, the CTDOB conducted a rigorous diligence process, assessing all aspects of TNB's planned operations and business model. One reason for thoroughness was that, as explained above, TNB planned to forego FDIC insurance and therefore would not be regulated by the FDIC. Instead, the CTDOB would be TNB's chartering authority and regulator as provided under relevant state and federal law. 50. In August 2017, the CTDOB issued TNB a temporary COA, which set forth several conditions TNB was required to meet before the CTDOB would issue a final COA. 51. Most of the CTDOB's conditions were within TNB's sole power to address. 52. One, however, was not. The CTDOB asked for evidence that the FRB would open a master account for TNB. D. TNB applies for a master account. 53. The application for a master account is a single-page form agreement requiring only basic information about the applicant, including contact information for company representatives and an officer's signature. 54. The application process is typically routine. The application form itself states that processing may take 5 to 7 business days. You need to read that more closely, dude. May being the key word. May. It may take longer than 5 to 7 business days, too. That's what they said there, whether you realize that or not. 55. By August 2017, TNB had all of the information it needed to apply for a master account with the FRB-NY except an American Bankers Association ABA routing number issued by Acuity, the ABA's official registrar of routing numbers. 56. Acuity's application for a routing number is almost as short as the application for a master account. The only eligibility requirements are that the applicant be chartered and, quote, eligible to maintain an account at a Federal Reserve Bank. They got you in a Gordian knot here, dude. 57. The Acuity application states that it takes approximately 2 weeks to process and, quote, will be forwarded to the Federal Reserve in the applicant's district for verification. 58. TNB submitted a routing number application to Acuity in August of 2017, providing a copy of its temporary COA and stating that it was eligible to maintain a Federal Reserve Bank account. Eligible. Big fucking whoop-de-doo. 59. As TNB expected, Acuity forwarded TNB's routing number request to the FRB-NY for verification that TNB would be eligible to maintain a master account. 60. After weeks passed with no verification from the FRB-NY that TNB was eligible for an account, TNB discussed its routing number request with an attorney for the FRB-NY. The attorney explained that the delay in verification was due to the CTDOB's issuance of a temporary COA. The FRB-NY would not open TNB's master account without proof of a final COA. The attorney was also informed that the attorney also informed TNB that the FRB-NY requires an institution to have at least $500,000 in deposits to obtain a master account, and TNB did not yet have any deposits. 61. TNB explained that the FRB-NY attorney, to the FRB-NY attorney, that it faced a, quote, chicken or egg problem, that the CTDOB required evidence that the FRB-NY would establish a master account for TNB before it would issue a final COA, and TNB's application for a routing number, which was necessary in order to maintain a master account, was being held up because TNB did not have a final COA. Okay, I could settle this shit right now. The requirement that needs to be met is twofold, dude. You need to A, get $500,000 worth of sponsorship, and B, get this fucking COA thing resolved. Get a final COA, and then go to the FRB-NY, and then we'll say, oh, okay, you got a final, okay, all right, and you've got $500,000, oh, okay, all right, no problem, here's your fucking account. Why is this even a fucking issue? Continuing on. 62. The FRB-NY attorney agreed to inform Acuity that TNB would be eligible for a master account with the FRB-NY on issuance of a final COA from the CTDOB and maintenance of $500,000 in deposit. Okay, there's another requirement there. Maintenance of $500,000 in deposit. So Acuity issued a routing number to TNB on October of 2017. Okay, so they delayed 2 months, but Acuity did issue the routing number, so they did fulfill that requirement. Continuing on. 63. The FRB-NY attorney informed TNB that the FRB-NY would have to conduct due diligence before it would open a master account because TNB would not be insured and regulated by the FDIC. The attorney advised TNB to hold off on submitting the master account application form until after the FRBNY completed its diligence. 64. As explained below, the FRBNY's diligence review ultimately concluded in TNB's favor. The FRBNY identified no operational risks precluding TNB from opening a master account. Okay, we might be able to challenge that claim there. Continuing on. 65. The FRBNY's diligence process began in September of 2017 when TNB received a series of document and information requests from the FRBNY. TNB provided prompt and comprehensive responses. 66. The FRBNY continued to make new requests through early November 2017, focusing on creditworthiness and anti-money laundering issues. Again, TNB provided complete and timely responses. 67. TNB was confident that the FRBNY would find no basis to deny a master account application given the rigorous year-long process it had already been through with the CTDOB and the fact that TNB's business plan was straightforward and virtually riskless. TNB's confidence was well placed, and the FRBNY did not identify any operational basis to deny a master account to TNB. Okay, well, that might be because you didn't have $500,000 under your custodialship for any duration of time. Continuing on. 68. The FRBNY completed its diligence in early November 2017. An attorney for FRBNY informed TNB that the FRBNY was prepared to communicate to the CTDOB that the TNB would be permitted to open a master account following the issuance of a final COA from the CTDOB and the maintenance of $500,000 in non-trust deposits, which TNB has lined up. Fun safu? That communication should have been sufficient for the CTDOB to issue TNB's final COA and for TNB to receive its master account. 69. But the FRBNY also informed TNB that the board had become aware of TNB's intention to apply for a master account and wanted time to consider the potential effects of TNB's business model. 70. TNB waited weeks for word of the board's deliberations. In early December 2017, the FRBNY informed TNB that it expected the board would sign off on TNB's master account the following week. But later that same day, the FRBNY told TNB that it had been contacted by the board and that TNB should not expect approval anytime soon. 71. The FRBNY did not provide a specific reason for the board's delay, but TNB's principals understood that it related to the impending replacement of the board's chairperson. The board staff was unwilling to decide on TNB's master account until the new chairperson was seated. 72. On February 1st, 2018, little more than a week after the board's new chairperson was confirmed by the Senate, the president and CEO of the FRBNY and its general counsel informed TNB in a telephone call that the board had raised, quote, policy concerns regarding TNB's application. They indicated they were pessimistic that the board would allow FRBNY to issue a master account to TNB. 73. Although there was no legal basis for the FRB to deny TNB's master account application because of the board's policy concerns, TNB immediately worked to schedule a meeting with the board staff to discuss and hopefully resolve these concerns. 74. On February 14, 2018, TNB's principals and legal advisors met in Washington, D.C. with several members of the FRBNY and the board's staff, including its general counsel. TNB and its representatives responded fully to the questions posed, but the staff said only that it would continue its analysis. Hold on one moment here. Had to rehydrate there. 75. On March 27, 2018, unable to reach the board's decision-making authorities, TNB convened another meeting with the FRB-NY, providing a point-by-point response to all policy concerns expressed by board staff during the February 14, 2018 meeting. The FRB-NY's representatives were sympathetic to TNB's arguments and said they would convey them to the board's chairperson and staff. 76. As weeks went by with still no decision, TNB suspected the board and the FRB-NY understood that they had no legal basis to refuse a master account application by TNB and intended to go around TNB's statutory entitlement by delaying the process until TNB finally gave up. TNB had no intention of doing so. 77. On April 26, 2018, TNB submitted to the board and the FRB-NY a comprehensive written response to each and every policy concern previously raised by the board. 78. On April 27, 2018, having fully undergone the due diligence review overseen by the FRB-NY, TNB formally filed the application to request a master account. 79. To date, the FRB-NY has refused to act on TNB's application or to inform the CTDOB that it is prepared to open a master account for TNB. 80. TNB's temporary COA expires by its terms in early 2019. TNB's business complements the board's policies. 81. Though the FRB-NY has no legal basis to withhold TNB's master account because of the board's, quote, policy concerns, the only basis for rejection that the FRB-NY has given for months of review and delay, those concerns in any event are baseless. I don't know if that's actually yours to determine, dude. 82. TNB's business, if it has any effect on the broader economy, which is highly doubtful, will only augment the effectiveness of the board's monetary policy by reinforcing the policy tools that the Federal Reserve System uses to influence interest rates. 83. The effective federal funds rate is the interest rate at which depository institutions, banks, savings institutions, thrifts, and credit unions, and government-sponsored enterprises borrow from and lend to each other overnight to meet short-term business needs. 84. The board does not control the federal funds rate directly. Instead, the Federal Open Market Committee, FOMC, sets a target range which, quote, has varied widely over the years in response to prevailing economic conditions. 85. The target federal funds rate serves as a benchmark for, quote, everything from credit card and auto loan rates to certificate of deposit yields. Its influence on the broader U.S. and global economy is profound. It is, quote, arguably the most important interest rate in the world. 86. Typically, the effective funds rate, the value-weighted median of what borrowers in the market pay, lies in the target range, which is the FOMC's intention. 87. The Federal Reserve System has a variety of policy tools to influence the effective federal funds rate, including the IOER program. 88. Since 2008, Congress has permitted the Federal Reserve banks to pay IOER. interest on excess reserves deposited with the Federal Reserve banks at a rate set by the board. 89. The board has the authority, under appropriate circumstances, to adjust the IOER rate, quote, by raising or lowering the IOER rate. The Federal Reserve can change the attractiveness of holding excess balances and thus affect the federal funds rate and other short-term market interest rates. And that'd be one reason why they want to let you in. 90. The IOER rate incentivizes banks to lend at no less than the IOER rate. There is no reason for a bank to withdraw excess reserves from the Federal Reserve banks only to earn lower interest rates. 91. In addition, the IOER rate provides an incentive for banks to borrow funds at rates that lie below the IOER rate, as they can earn the difference between the IOER rate and their borrowing rate on the amounts borrowed. Some Federal Reserve Bank account holders, such as Federal Home Loan Banks, are not permitted under applicable laws and regulations to earn interest on reserves. As a result, they tend to be willing to lend reserves for a positive interest rate that may lie below the IOER rate. 92. Because of these factors, the federal funds rate has settled strictly below the IOER rate in recent years, a period in which the supply of reserve balances has been ample. 93. But the IOER program has not produced all of its intended effects. 94. In publicly advocating the adoption of the legislation that permits the payment of IOER members of the board, expressed the belief that banks, particularly smaller banks acting in a competitive fashion, would pass on IOER earnings to their depositors. IOER would consequently provide an opportunity for those smaller banks to compete with the larger incumbent banks. 95. Yet a significant and persistent gap has existed and continues to widen between the IOER rate and the interest rates paid by banks, particularly large banks, to their depositors. This trend affects not only commercial depositors, but also individual Americans, as underscored by the testimony before Congress earlier this year. This issue came up as House Financial Services Committee Chairman Jeb Hensarling sparred with Federal Chairman Jerome Powell. Hensarling was complaining about the interest the Fed pays banks. Quote, "You pay 150 basis points as the IOER rate. Constituents are getting 10, the Texas Republican said. Quote, "Retail deposits, as you know, are sticky on the way up. They generally come up with a lag," Powell replied. That's reflected in the data. In January, the average rate on a 12-month certificate of deposit with a $10,000 minimum was just 0.29%, only 10 basis points higher than the lowest level during the current economic expansion. Other deposit rates are similarly scant. 97. Further evidence of a lack of pass-through to depositors of the IOER rate is seen in the reports of the FDIC's weekly national rates. For example, the FDIC recently reported that jumbo deposits, $100,000 or more, on average earned 8 basis points, 0.08%, from savings accounts and 5 basis points, 0.05%, from checking accounts, while the Federal Reserve banks pay 195 basis points, 1.95%, as the IOER rate. 98. TNB is committed to a business plan that would, at the margin, push against these disheartening outcomes for savers and depositors by more efficiently and effectively transmitting rising Federal Reserve rates to TNB depositors, such as money market funds. This would in fact support the board's stated policy intentions for the IOER program. 99. TNB's business objective is to attract customers who wish to receive a more competitive rate on safe deposits. If successful, TNB will place competitive pressure, primarily on large banks, to raise depository interest rates for all depositors, including small businesses and consumers. 100. TNB will do so by passing on to its customers most of its IOER earnings, improving both the efficiency and fairness of the administration of the payment of IOER. Because TNB's clients will include widely held money market mutual funds, those benefits could accrue not only to commercial depositors, but also to individual Americans. 101. Consequently, TNB's business model will, if anything, only enhance the efficacy of IOER as a policy tool, reinforcing its effect on the broader market, and thereby supporting the Federal Reserve System's efforts to keep the effective federal funds rate within the target range. 102. Ironically, the board, the FOMC, and the FRB have made a very similar effort through at least two programs: the Overnight Reserve Repurchase Agreement Facility, ONRRP, and the Foreign Repo Pool, FRP. 103. The ONRRP facility was established by the FOMC as a supplementary policy tool to help control the effective federal funds rate by passing on interest to a wider group of participants, including money market funds, broker-dealers, and Federal Home Loan banks. That is, not only to banks eligible to receive IOER, as the board has explained. 1. An exception in an ONRRP operation, an eligible financial counterparty provides funds to the Federal Reserve in exchange for Treasury securities on the Federal Reserve's balance sheet and is paid the ONRRP rate the following day. The funds are returned to the counterparty and the securities are returned to the Federal Reserve. In general, any counterparty that is eligible to participate in ONRRP operations should be unwilling to invest funds overnight with another counterparty at a rate below the ONRRP rate. 104. Participants in the ONRRP include money market funds and the Federal Home Loan banks that are ineligible to receive IOER and otherwise receive relatively low rates of deposit interest from other banks. Let me check something out here really quick. Yeah? Okay, that's looking good. That's looking good. I just had to check something. I'd received a message and I'm not even sure where hello, just seeing if you had any Bitcoin for some. Somebody hit me up for something some OTC, but no, sorry dude, not doing it. Continuing on, if I can find the thing where I was at now. Jeez Christ. Alright, and verifying here. Good. Alright, we're on page 20 of 24, so like I said, we're blowing right through this bad boy. 104. Participants in the ONRRP include money market funds and Federal Home Loan banks that are ineligible to receive IOER and otherwise receive relatively low rates of deposit interest from other banks. 105. Through the ONRRP facility, the FRBNY sells a government security to a money market fund or other eligible participant and simultaneously agrees to buy the security back the next day at a specified interest rate, which is currently set at 20 basis points below the IOER rate. 106. It is important to note that the FRBNY and other Federal Reserve banks are credit risk-free. Therefore, the credit risk of lending to the FRBNY through the ONRRP facility is not reduced by the proffering of the security in the facility. The credit risk assumed by a lending participant would be the same if the participant simply deposited funds with the FRBNY. Instead, the use of the securities allows the FRBNY to offer the overnight ONRRP facility to non-depositories by qualifying such transactions as, quote, open market operation, one of the limited types of securities transactions in which the Federal Reserve banks are permitted to participate. 107. The ONRRP offering rate, the maximum the FRNB is willing to pay to money market funds and other participants, sets a floor for the federal funds rate. If a higher interest rate is available through the ONRRP facility than what is offered by a bank, money market funds and other participants will place more funds on the ONRRP facility, thereby buoying the federal funds rate by reducing the supply of funds lent into private federal funds market. Lent into the private federal funds market. In other words, getting the liquidity above the board instead of stashed away in somebody's vault. 108. The ONRRP facility is essentially, quote, a public option that is intended with the IOER rate to bolster the Federal Reserve System's degree of control over the federal funds rate. 109. TNB's business model would serve as an almost equivalent economic function, albeit on a vastly smaller scale. TNB will provide a very safe overnight investment to depositors like the one provided by the Federal Reserve via its ONRRP facility. 110. Yet TNB, even though it is a depository institution, is being denied the ability to deposit with the FRBNY, unlike the participants in the ONRRP facility who can invest securely on an overnight basis with the FRBNY, even though they are ineligible for a master account. 110. Second, TNB's business is also consistent with the FRP, a facility the FRBNY currently operates for foreign central banks. 112. Through the FRP, the FRBNY accepts cash balances from foreign central banks and pays an interest rate through overnight securities that is usually very close to the market rate for U.S. Treasury repo transactions. Recently, that rate has also been close to the IOER rate. 113. There is no reported cap on the amount of funds the FRBNY is willing to accept under the FRP, and in June 2018 it held $240 billion in FRP-related funds, orders of magnitude above the likely amount of deposits that TNB will hold. 114. TNB would serve an almost equivalent economic function by providing a very safe overnight investment, albeit again on a vastly smaller scale. TNB would accept deposits from these same foreign central banks eligible for the FRP, in competition with the FRBNY. Conflict of interest. 115. Thus allowing the TNB to operate will provide a socially valuable competitive force both to large too-big-to-fail banks and the public sector. TNB will provide to eligible depositors a form of liquid safe deposit at a highly competitive rate tied to the IOER rate, 116. In fact, by denying TNB a master account, the FRBNY is effectively limiting competition for its ONRPP, RRP, and FRP facilities. 117. Additionally, by denying TNB a master account, the FRBNY is providing an advantage to certain foreign banks through its FRP program that it will not provide to TNB, a domestic state-chartered bank. 118. Because of the statutory requirement that the FRBNY provide services on a non-discriminatory basis, the FRBNY does not possess the power to limit competition in this fashion. Yes, they do. They're denying you the ability to apply for an account, dude. That limits competition in this fashion, and that's their power. 119. In all events, the FRBNY and the board have many lawful tools to monitor and influence the business plan pursued by TNB, and TNB has consistently expressed its willingness to work cooperatively with them. Count 1. Declaratory judgment under 12 U.S.C. 248A C2, 120. Plaintiff repeats and realleges the allegations set forth in the preceding paragraphs as if fully set forth herein. 121. An actual controversy exists within this court's jurisdiction concerning the interpretation and application of 12 U.S.C. 248AC2 and related statutes, regulations, and policy pronouncements, such that the court should declare the rights of TNB. 122. The FRBNY is legally required to provide its services, including and especially the maintenance of a master account, to all, quote, depository institutions defined to include any bank, like TNB, quote, engaged in the business of receiving deposits other than trust funds, on an equal and non-discriminatory basis. 12 U.S.C. 461B1AI, citing ID 1815. 123. The FRBNY has refused to provide a master account to TNB, notwithstanding the statutory command that it do so. Moreover, the FRBNY's reasons for this refusal defy logic and are contrary to the very policy goals that it seeks to promote. 124. Accordingly, plaintiff seeks a declaration from this court that TNB is entitled to open a master account with the FRBNY. Request for relief. Wherefore, TNB requests judgment against FRBNY as follows. A declaratory judgment that TNB is entitled to a master account with the FRBNY. B, an order directing the FRBNY to open a master account on behalf of TNB. C, an order providing for a speedy hearing under Rule 57 of the FRCP. D, cost, fees, and other expenses under the Equal Access to Justice Act, 28 U.S.C. 2412, and E, any other and further relief the court deems just and proper. Dated New York, New York, August 31st, 2018. Respectfully submitted, Dewey Pegno and Kremarski LLP. And that is it. God damn. Blew through that thing in about an hour and change. So, on its face, I can see the potential for a conflict of interest on the part of the FRBNY, because it is kind of in their statutory, requirements to give these guys an account and to treat them non-discriminatory. non-discriminatorily. However, in reviewing the material in this, I detect a couple points where they could actually be out of compliance. There may be some sort of review period that they were supposed to be holding, like some sort of custodial period of the $500,000 that they haven't met yet. Some other requirement based on the types of participants they intend to have in their fund. There could be any number of procedural ways that they're kept from having this, but this exemplifies something that I've been talking about for a long time on this show, and that is that most of the regulatory requirements that exist have in them levers and statutory requirements that can be used in a discriminatory fashion, such as this, as we're seeing. And so it's become a system whereby existing interests keep additional interests from coming in and competing with them. And that should be plain to anybody who reads like the bit license or California's attempt at bit license that's been rejected like 4 times now. If you read them, you can see there, or hear or read, or detect that there are several points that can be abused by the administrating authority, and several points that could be unfairly leveraged to the benefit of existing and entrenched and enriched interests. This material that we just blew through, it's making claims that foreign banks are giving preferential treatment by comparison to them. So, again, this is a point of abuse. And and you can say all day long, this is corruption. There's obviously some backdoor dealing going on that these guys aren't privy to. And again, when I read bit license, it was all clear to me. The head of the NYDFS could literally write up a what do you call that? Like a provisional bit license for his nephew based on, I think he's good for it. And of course there's a board that will review the application and all that, but he has final say over it. And so, he'll put it to the board, but he'll say, hey, I would really like it if you would give little Timmy a bit license because he's my nephew, and I really want you to do this favor for me. And before you know it, he's got a provisional license that the head of the NYDFS could then turn into a permanent license. And he can arbitrarily adjust the conditions of that license. So he could say, little Timmy, you're free and good. You've got a permanent bit license. The board's approved it, no problems. Every time you're up for renewal, as long as I'm waving the magic wand in this department, I'll just go ahead and wave the magic wand and give you another provisional license. The board will turn it into a permanent license, or I'll vote to make it a permanent license afterward, and everything will be fine. It won't matter what your credit record is. It'll just matter that you're little Timmy, my nephew. And believe it or not, there are plenty of little fucking legal mazes and streams of red tape everywhere to facilitate exactly that type of market containment. And it's been going on for at least the last 30 years, if not longer. Much longer. I would say probably the last 100 years. And this is one of the points where you having possession of your funds in a Bitcoin or other cryptocurrency wallet, not off-chain not that Lightning Network bullshit. I mean, you have the keys. You have the public key. You have the private key. You are the only person that has access to it. That's what makes you so much more powerful than all of these fuckers, because you don't have to guess at your funds. You know where your funds are. You don't have to rely on these people to give you your funds when you want your funds. They're in your wallet already. And there is no arbitrator, or there's no arbiter over that. Now, I did see some proposal that just like scared the shit out of me, and I think if it goes through, it'll completely fuck up Bitcoin. And that was the idea of putting locks on the public and private key. Now imagine this. You've got a wallet from some wallet vendor. You download their wallet. You think it's wonderful. Friends have told you it's wonderful. What you don't know is that there's locks on the private and public key. So if they don't like the person that's sending the money to you, they could disqualify it. If they don't like the person that you want to give funds to, they can disqualify it. And because they're going to be the little pre-funder if they do this Lightning Network bullshit, they'll be the arbiter of over whether your transactions go through or not. You know, because they'll be the counterparty to your transactions. Hey, you fucking people that I'm arguing with on Twitter, if you're listening right now, you're not thinking about any of this shit at all. You just like, it's like you're hearing it out of Andreas Antonopoulos' mouth or somebody else's. And despite the fact they're leaving huge gaps in their explanations, huge omissions in their explanations, that if you actually knew what they were talking about and actually knew the full context, you would double finger fucking salute them and tell them to fuck off. But no, it's you know, you're idle. You know, and I always worry about that, you know, that people start taking me too seriously. And next thing you know, somebody's pointing at me going, hey, this guy's influenced by you. You know, and I don't know for sure that the guy's influenced by anybody, but it seems to me when I'm listening to him and I'm hearing these huge fucking omissions, or what I think are omissions, I could be completely Looney Tunes, but I doubt it. When I hear these huge omissions and what he's talking about, I'm just like, the people are just buying this shit whole cloth, you know, and it's really, really sad. I mean, because if they actually did read the Satoshi Nakamoto white paper for Bitcoin, and then they listened to what Andreas Antonopoulos or one of these guys was saying, they'd be like, this isn't fucking Bitcoin. What you're describing is nowhere like, it's nothing like Bitcoin. It relies on third parties and involves third parties to tell me whose funds are what. It scrapes my signature information off with fucking SegWit and subsects that into a little compartment that's nice and easy to maliate. You know, but it's a maliation fix, right? You know, it just makes the I posit that it makes it easier to maliate the transaction data because it subsects it away from the transactions itself. So you don't have to recreate the entire block. You just have to recreate the signature information, the witness data for the transactions, and you're all golden. You can fucking whoever you want over. But that's my belief. Again, that's not a 100% certain thing. But that's my belief. I also believe that not everybody's going to be running one of these fucking Lightning nodes. And so you're going to have custodial accounts by default. There's no other way around it. And that the nodes, the little hot points, those people are going to have to be licensed and regulated and taxed and all that other shit. They're going to be adding layer 3 taxation layer. I swear. And that's just my perspective, you know? That I look at what they're proposing, and I look at the way that they're proposing going about it, and I'm saying to myself, this fits right into all the fucking legal frameworks and all the legislation that I've been reading, where they're talking about custodians and money transmitters and custodial requirements and fitness requirements of the custodians and all this other bullshit. And I'm like, okay, they're laying the groundwork for either a software distributor who's distributes software to facilitate a payment service, right? They're setting up that guy to need to get a license And so then he is going to have to have some sort of regulatory requirement that he's passing down to all of his users. Now, personally, I believe that these vendors already exist. They've already got the design for the products they're intending to distribute, and in some cases, they're already distributing hardware to satisfy these services. Again, what I believe they're not bothering to make note of is that they have control at some point or another of that software or of the hardware. And so at some point or another, they could require some sort of license from you. Say, look, this is our IP, man. It's based on open source shit, but this is our hardware. This is our software. So you need to get a license in order to be able to use this software. It's a new requirement. And those of you who are like laughing incredulously right now at me talking about this, I want you to keep this in mind. Shapeshift.io, a service specifically set up to be able to transact monetary value on their service from one person to another anywhere on the fucking planet, moved out of New York specifically because BitLicense would have terminated their ability to do business, and did terminate their ability to do business with anybody in New York, is now requiring you to have it, or going to be requiring you to have a membership in which they are going to be collecting personal information from you to associate with your account. They did not previously have this requirement. As a matter of fact, the specific reason for using Shapeshift was the lack of a AML KYC bullshit. And yet now they're requiring memberships, and I can almost guarantee it's because they're being pressured or coerced to do so. Now you want to believe that you want to live in belief that Blockstream is going to be, freely issuing access to its software, and Lightning Labs is going to be freely issuing access to their software, when they're giving some sort of federal mandate to require all of their users of their software to offer up AML KYC. There's no stated requirement on Lightning or like a stated policy on Lightning or in Blockstream's schedule of shit that precludes the idea that they will initially charge for licensure. You see the difference here? Shapeshift is now violating a stated policy in order to comply with a federal or state entity. So what is to say that the same will not happen of Lightning Labs? I posit absolutely nothing. And that's something to take to heart. Anyway, let's go ahead and throw back down into some music. And, Thunderkiss, 1965, White Zombie, here on Coin Metal. And that was Gizmachi with The Answer. And wouldn't that be nice to have the answer to pretty much everything? I think it was 42, but we don't know what the question was, so. Anywho, got a few things. And this one thing I caught on my Twitter feed, this is actually something that I think I might have mentioned as like a dream kind of idea, or an ideal way to broker one's social media metadata, that basically give you some sort of ownership. It's like, I don't mind that Facebook sells the psychological profile data that they glean from my postings and whatnot. I really don't. However, I do mind that they don't cut me in on it, because it's me, it's my metadata, so give me my fucking money. That's how I feel about it. Continuing on, this is on CoinSpeaker. IBM and Humanity.co join hands to manage blockchain-based property rights for personal data. This is by Bhushan Akalar. Let's do a quick check and verify here. So yes, penis. Humanity aims at establishing transparent data sharing between individuals and corporations. Humanity's global consent ledger gives users absolute control over individual data. With the growing number of internet users across the globe, data transparency remains as one of the biggest issues today. Online businesses and websites usually have a centralized control over their users' data. This data is usually sold to advertisers and companies who understand the user behavior and patterns to sell their products and services. Humanity, a blockchain startup, aims to change the rules of the game by giving power back into the hands of the users. By leveraging the use of blockchain technology, Humanity will give users the property right of their private information while allowing them to decide whom to share it with, or to whom to share it with. To achieve this, Humanity has joined hands with tech giant IBM to use its blockchain platform as the foundational technology for its project. The official press release notes that Humanity.co will allow people to control and manage consent, authorization, and commercial use of their personal information via a permissioned blockchain-based data marketplace supporting millions of users. I'm not sure how that's going to work. The key features of blockchain technology, like immutability and decentralization, helps to establish... Whoa. The characteristics of both immutability and decentralization are derived from the way that we come by the blockchain of Bitcoin. And that's miners, public miners operating in an ad hoc fashion on a public network. Continuing on. The key features of blockchain technology, like immutability and decentralization, helps to establish a transparent environment between our organizations and individuals. Yeah, assuming the individuals are actually mining for the organizations. Continuing on. And knowingly so. In addition to the blockchain technology, Humanity's global consent ledger also features advanced data encryption and use of AI algorithms. Big fucking whoop-de-doo, bunch of fucking buzzword bullshit. Humanity focuses on transparent data sharing in the healthcare industry. Oh great, a new honeypot to get compromised. Humanity recently launched its May 31st application on both Android and iOS platforms, built using the IBM blockchain technology. The name of the app is strategically given to refer to the 31st human right, in addition to the 30 already approved by the United Nations. Fuck the United Nations. Not going to be an entity in another decade at the rate we're going. Humanity's major focus lies on transparent data sharing in the healthcare industry. Individual customers can decide with whom they want to share their data for ergo pharmaceutical companies, pharmacists, or researchers. The hashtag My31 app is currently consumer-centric. For now, the company plans to launch its enterprise version for corporations by the first quarter of 2019. Humanity founder and CEO Richie Etwaru said that company's blockchain-based healthcare marketplace will give its users control over information like search history, location data, and e-commerce habits. Interesting. Quote, by creating a global consent ledger built on the IBM blockchain platform, people, corporations, and the monetization of human data can coexist sustainably. People will enjoy greater levels of security, privacy, and control, while corporations will be able to lawfully benefit from access to higher quality data that has the explicit consent and authorization of its rightful owner. Bridget Van Krollingen, Senior Vice President, IBM Global Industries Platforms and Blockchain, said, quote, IBM has long been focused on providing data stewardship, which supports our belief that your data is your data. With new digital business models driving data sharing to unprecedented levels, we believe that blockchain can serve as a key ingredient to enhance trust and responsibility with regard to data. Our work with Humanity.co is a pioneering example of how permissioned blockchain can help balance individual rights with distributed data access of scale. Okay, so what happens if IBM decides to roll back their blockchain? Somebody want to answer that one? This is back again to stewardship. I understand what humanity is trying to do. However, they do set themselves up as partial stewards, and they set IBM up as additional stewards. And so, with regard to IBM and their blockchain technology, I don't have any confidence in it. Mostly because, to my knowledge, nobody outside of IBM is mining it. I could be wrong. There could be projects that are actually mined publicly, but are used as the blockchain the blockchain that they tag their shit to. And and with regard to that, it could even be the Bitcoin blockchain itself under some layer 2 or sidechain bullshit. Which again would allow another arbiter in there, that being entities that currently allow the use of their IP in the function of all of this. And therein lies the hang point for licensure and all of that other bullshit. To me, it's interesting and yet again sad. I think that there could be some sort of, maybe social media coin or social media rating that defines the value of your quote-unquote token on their platform. And that, maybe internet companies could invest in it. Maybe create an exchange wherein your data specifically is traded as an individual security on that exchange, as opposed to a large batch, a huge database to be sold off to the highest bidder. And I think that kind of marketplace is actually possible now, where it may not have been previously. Where social media organizations would tout their services, and it's like, these are our traits, these are the kind of services that we offer available, these are the types of metadata that we collect, this is the market price for them, so on and so forth. I think it could take that marketplace and put it back in your hands, and to that end, I think that if it was done right, as opposed to what I expect it's going to be, basically a big ass surveillance tape. What would be really cool is if it was used as a way to help you, like motivate you to enhance the quality of your of the product that you're distributing. So maybe you do funny cat videos, right? But if you do them a little bit better, you edit them a little bit cleaner, you really watch your sound cues and make them go along with the video just right. You put a little more study into, proper cinematography and camera angles, that the better product that you produce, the more you'll be rewarded. Because more people will want your data, or want access to it. Or at least your content, same diff. But it's always been a monetized commodity. The question is, who gets to monetize it, at what rate, and what permissions can they provide, or what access can they provide, and so on and so forth. And so I think that, what would be cool is if you had a way to, when you sign up for Twitter or Facebook or whatever, that you get to select the cryptocurrency that you want to be rewarded in. And you can change that at a later time too. And so you could basically be your own ICO with a backing of, Dogecoin or Bitcoin Cash or Verge. And again, you could if you could change that to your desired coin at option, that would be pretty fucking cool. That like a combination of like a Patreon / Twitter, but where you could use any cryptocurrency that they traded or transacted in on that particular exchange, or social media platform / exchange. And I think that's probably the better use, because again, it creates a marketplace where your content could be accurately evaluated by the market and give you some sort of return stimuli, besides the current metrics that are currently available. Maybe nobody likes your stuff, and so nobody invests in it. But maybe for whatever reason the algorithms aren't lined up right, the administrators for that particular app don't like you or don't like your message, you're just not getting discovered. But because you line up with the values of some other people, they would be able to invest in it. And when you expand the user base big enough, you can almost guarantee that somebody does like it. And that's the thing, is that if you like it, chances are somebody else does. There's I want to say 7.6 billion of us on this planet or more. So yeah, really good chances there that if you were on the same social media platform as, say 200, 300, 400 people that like what you like, or more, of course, but that they could give you like some sort of micropayments in and of themselves, just because they like your content. And you say you like Verge, or say you like Bitcoin, that you would be able to be receiving payments, no obligatory payments, of course. I'm wholly against things like a contractual payment schedule or something like that. I think that the way that the markets operate, that you really shouldn't be under any really long-term contracts like that. That the market can change so quickly that whereas one day you're at a significant advantage, the next day you might not be. You might be at a disadvantage. the period of your disadvantage might exceed the period of your advantage, and then you're wrecked again. You know? Anywho. But yeah, this humanity thing, I think it's kind of interesting. There's a lot of different quote-unquote blockchain ICO projects centered around healthcare. And I think that again is a mistake. Only because the recent ransomware attacks is in like last year on the British healthcare system, it cost them like millions and millions of dollars to deal with that shit, and it was really screwing up people's medical experience, you know, because the administrators for the system didn't have access to people's records. So during their downtime, when they were stuck with that ransomware on their servers, they were completely screwed. Now I don't know where or how a quote-unquote blockchain is supposed to be helping that. Unless, of course, they're networked with several other hospitals on the same network. You know, and they're all trading the same tokens or making transactions on the same network. But, again, these are going to be like private ledgers. And the problem with that is that all you have to do then is gain access to it. And if you can gain access to it and spoof your credibility on that network as a legal and viable participant, that's all that's required. You know, and then after that you can go to town. You know, and I think that's one of the big fears that the central bank for New York is really concerned about with TNB, is that once they do have the certification, that maybe because they're not as well established, that they would have some sort of infrastructure breakdown or whatnot, and they would be in a position in the market that's not really a position where you want attackers into, not really a soft underbelly where you want to be letting unknown elements into. And so as far as like that lawsuit, I really don't think it's going to go in TNB's favor. If it does, though, what it will do is it will open up the process more, and it will make it more transparent. They'll pass some sort of act or whatnot that will allow additional new participants to be coming into the market via the way that TNB is trying to. And I think that's pretty key, especially with regard to crypto, because much of legacy finance has been content to look at crypto as just another medium, you know, that they can do behind closed doors and not have to worry about being exposed to the outer world. And unfortunately, I don't see that as the long-term reality. I think one thing that blockchains are good at, and this is assuming, of course, that they are immutable and they are distributed to other members, not you, you know, semi-disinterested parties, that you would have a consensus of data amongst them, in which case you could trust it. You know, but that again, I believe you require an ad hoc network, meaning people can get on it, people can get off of it. But offer up mining contracts to the public. Maybe they don't have ASIC boxes, but maybe you don't need them to. You know? Maybe you just need them to have a laptop to provide enough hashing power to do transactions on your network, to do your service. You know, or do transactions on your coin. And that's already possible with a few cryptocurrencies, and I believe that in itself will become more legitimate as a contrast to things like Lightning that are completely off-chain. You know, if you could imagine doing your transactions via a currency such as Verge, where you've got a block time of 30 seconds. 30 seconds. And you'll get some sort of I think they do some sort of confirmation at 6 seconds. I can't exactly remember that. But the coin itself, 30 seconds. So that's 20 times faster than Bitcoin per block. It's got the same amount of block capacity per block. So, that's equivalent to 20 megabyte 10-minute blocks for Bitcoin. So when you look at it that way, and you look at also the amount of friction that you would want to associate with any kind of micropayments, it becomes unviable to be trying to transact these things on the Bitcoin network, even with Lightning. Because when you calculate the electricity cost of running your node that allows all this business, and you contrast that with a straight on-chain transaction on Verge's network, it fails. And this point isn't terribly important right now, but that's only because the vast majority of the people that are using cryptocurrencies as a daily means kind of medium is relatively small. I do expect, however, over the next 2 to 5 years, that the number of people that own cryptocurrencies, actually I should just say 2 to 6 months, because I'm seeing enough volatility going on out there with fiat currencies collapsing that it's leading me to believe that the cascade effect is starting. We're already seeing the canaries in the coal mine. The weaker markets are already suffering, but I expect that contagion to continue. And I expect it also to affect cryptocurrencies. Like on Wednesday, we did that coverage of Turkish markets where they were selling Bitcoin for equivalent of $24,000. And then we read an article that stipulated that this was a miscalculation. I went back several times, and it's actually gone up. I think it's up to $31,000 now per Bitcoin. I don't expect that contagion to stand still. That is going to creep into U.S. markets. I mean, I had somebody hit me up on Facebook in DMs trying to do an OTC trade or trying to find people who are interested in doing OTC trades for Bitcoin. What does that tell you? That tells me that they're probably going to be offering above market, probably at a significant markup, because they have somebody in Zimbabwe or Turkey or Greece or Spain or any Venezuela, Argentina. I could go on and on. Any one of these countries that's experiencing a major fiat disruption right now, they're probably offering way above our markets for that Bitcoin. And that Bitcoin is going to get circulated out of our ecosystem here and out to the greater global economy. I know that there's some people out there that want to stop that shit. And we've already talked about a few of the means. But we'll see how it all shakes out. I really am expecting that the contagion from what's going on in other countries is going to start affecting the supplies on our markets, and that's going to cause the price to go up. Supply and demand, kids. Supply and demand. And it is with that I'd like to close out this episode. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as the last dance, I've been giving a lot of deference to Prong today, but I just got to do it, man. I got to do it. Divide and conquer. Last dance here on Coin Metal. Thank you very, very much for listening. You can find me on Twitter and also Facebook. Also in the Verge Currency Telegram channel and the one in Discord. So until Monday, y'all have an excellent weekend.